breakdown. Okay, I am going to be taking a trade for today. Right, the market is in a downtrend, and I'm making everyday price action. So if you see these vertical lines, they are selecting everyday price action. Like we're in a downtrend, right? So the market opens, goes down, and this was a mistaken buy, so don't really count it. I wanted to get out when the market had main profit, so I closed in $3 profit. Okay, like that. So like the market is going down. For trend traders, they saying the market is trending downwards, right? So we are going to follow that trend on the daily time frame. The previous king was bearish, so I'm expecting this day to be a bearish day too. Okay, so as you can see, I am just backtesting, seeing what was happening in the last 2 days, what price was doing. That's what I was doing, marking out the liquidity that was collected by the market, and then the market continued going downwards after hitting that order block. So what I do, you're going to see me doing this later on this video. I wait for a judas swing, right? If we are bearish, I wait for a price to go up in the lower time frames. If it hits a higher time frame PTRA, like an order block or like fair value gap or whatever, as long as it is previous day fair value gap or previous day order block, I'm not expecting price to be taking out yesterday's high. I'm expecting to be taking out today's low, right? So this is how I'm going to be doing it. I mark out I mark out the premium PT raise on the previous day, and then wait for the market to start being bullish, letting traders think that the market is now bullish and starting to come up, right? Then I wait for the market to react to the premium order block or the premium PDRA, whatever you choose to call it, whatever you're using. It might be a breaker, it might be an order block, it might be a fair value gap, it might be an OTE. I don't know what you'll be using. Okay, so right here I'm using I'm going to be just using an order block, right? I am backtesting, right? So I am just telling you the strategies that I use. I am expecting this candle, like this today's candle, to be a bearish candle. As you can see, we have got a premium PT array up there. If price wants to go there, right, it's cool. I don't mind. I'm not right. The market is always right. I marked out that order block. So if price reacts to that, I'm taking a sell, putting my stop loss, and I'll be good, right? But do not do this error if you don't have the experience, if you don't know what you're doing. I have been doing this for a lot of days, and I look for this every day when the market opens in the morning, and during the London session I'll be looking for judas swing, and then during the New York session you're looking for the room move. Okay, so that's what we call it. It's it's easier if you know what I'm talking about, if you trading ICD concept, right? As you can see right there, I noticed that there was an order block. An order block is when is the last previous candle. I didn't mark it out unfortunately, but I was looking at it with my eye, that took out a previous high or a previous low, right? The last down candle that took out a previous low. So then I saw price was starting to react to that level and didn't want to break and take the liquidity. It just went a little bit up that order block, right? But it didn't really close up. And then I saw right there that the market has changed its structure on the smaller time frame. That's why I moved to the 1 minute time frame. Then I marked out my fair value gap. I'm using the fair value gap and the order block for my entries, and I put my stop right on top of the high. Right, if it gets liquidated, it's cool. I'm just going to watch the market and we'll see what it's going to do. Right, so right there I was looking for a sell, because the previous candle, as you can see on the daily, it's black, which means it's falling. I'm using black and green, which means it's falling. So I'm not expecting price to go all the way up there. I'm just expecting it to trick traders into thinking that the market is now bullish on the lower time frames, and then start going where it is supposed to go on the higher time frames. Okay, on the higher time frames. So right there I'm marking out the previous highs for the previous days, 3 days back. That's the high that I marked out today's high, yesterday's highs, and today's the previous day before yesterday. Then as you can see, the price went back to my fair value gap, and I am going all in. I am going full margin, and I wanted to double this account. It's a demo account, so I am trading using a demo because I want to master price. Right, I don't want to feel anything. I don't feel anything when I'm trading. I don't want to use raw funds, because when you're using raw funds, I'll be using proper risk management. I'll calculate where I'm going in and calculate how much I want to lose in that time, right? So now we're just going to flip this account for fun and see what we can do with what we have in our hands. Right, so as you can see, there was a break of structure. I don't know if you know the break of structure right there below the fair value gap. The break of structure is when the market starts taking the sell side of the liquidity and stops taking the buy side of the liquidity, right? That's the break of structure, especially when it hits a higher time frame period, like a fair value gap and how do you call this, an order block. Those are the ones that I usually use. Right, so as you can see, price started consolidating around my entry price. This was a hard trade, but well, I'm just going to narrate on how I took it. So it was an easy hard trade too. It didn't take me the whole day to do this. I liked it, it was just an in and out mission, right? So right there, when the market broke, I entered the trade, waited for the trade to start working, and as you can see, it's showing signs that it wants to go down, but it's still tricking the buyers, making them think that the market structure is still bullish, right? And it's continuing doing that, and then they'll be happy saying, oh, it's going up, it's going up, it's going up. As you can see, it took buy side liquidity right there, and then rushed back. What did it rush to take out those equal lows right there, and that's where the liquidity is laying. And if you are in a buy, if you are seeing those kind of things in the marketplace, just know you just have to know that it's time for you to get out of the marketplace, right? So as you can see, that was taken out, and I'm just placing the stop loss so that you know where my stop is. I didn't put a stop loss because I was managing this trade as it goes, and I'm trading volatility indices, so there's no way the price can just jump from nowhere and go wherever it wants to go. If I saw price going up to those to the high of that order block, I would have closed the trade just like that. I would have closed the trade, right? So now the trade was starting to work, and it was starting to go down. I was expecting it to go down very quickly because that's a manipulation, that's a judas swing. I don't expect it to follow the trending. If you look at the market a lot, like I spend a lot of time look at this market, right? If it's trending when it's going up, it will just fall one time, right? When it goes up straight, when it goes down, it will go down slowly in a trending manner. I don't know if I'm the only one who has noticed that, but I have noticed that, and I use that when I'm trading. I know what I'm looking for. I know how long my trade is going to take. So if my judas swing was just a straight up go like this one, I'll know that it might take some time because the market has to create higher highs and lower lows, higher highs and lower lows, and it's going the opposite way, right? So that's what I use. But the market, when it's creating those higher highs and lower lows, it has to respect the PDRs, like the order blocks, the fair value gaps that are on top of the marketplace. It's just in case you are in a bearish condition like this, right? It has to respect the bearish. Like right now, I was looking at that green triangle behind there. It was supposed to support price to take it down under there. It is not supposed to go up than that, right? And that's what I was watching right there. So that's how I look for trades. Like that's my model, right? Like I look for trades, and as soon as I get a trade, what I mark out is the opposite of the obvious draw on liquidity. As you can see, those equal lows right there. That's where I'm going to be taking a bulk of my trades off, and I'm just going to leave one and let one trade, right? Sorry for that. So I went out and then I came back and I found the trade right around my stop loss right there, and I was surprised, like, wow, oh, what happened here? And then I realized that the price respected that fair value gap that we used for the entry. So that's when my feelings just went down. As you can see, after being touching that fair value gap, of course the wicks might have gone up, but the stop loss, you don't move it before some. I didn't move the stop loss, okay? I didn't move the stop loss right there because the trade hadn't even reached half the way of where I wanted it to go, but now it started moving and I was happy, and I was looking at that trade going down and taking those lows right there with the so sell side has been taken out right there. And the market starts to retrace now. This retracement will have you scared if you haven't done this for long enough. They usually scare me when I was starting out, like especially when you're in the 1 minute time frame, and then the market breaks structure and starts being bullish, and you start being scared. So if you don't know what you're doing, you might get scared real quick and remove your trade. But if you have been doing this for long enough and you're confident enough that you have seen back tested and live tested and front tested that that's what the market does, you know that I've been doing this for long enough to know that the market is not seeing my orders, doesn't care about my orders. It's just doing what the market does, and as long as you have got a good narrative on what you're doing, on why you're doing that, and why you should do that, and why you should do that, you'll be okay in the marketplace. And the one thing that you should take off when you're in these markets, I'm talking to myself, by the way. I'm not telling anyone. I'm just telling myself. I'm going to be watching these videos again after the 500 upload, so I'm going to be watching them. It's a trading documentary, right? As you can see right there, price started springing up and it hit me like, oh, what's happening? But I hit that PDRA, that if you can see that volume imbalance right there, I was watching that volume imbalance so that price doesn't cross right there. I wanted to see price not cross up into that volume imbalance. And when the candlestick closes down down under that imbalance, that'll be cool. I really would like that. It will confirm that we're still going under and we're still going to attack the sell side right there. That's where I'm going to be closing. Imagine risking $96 to make $400. That's like a 1:2. I don't know how much. Oh, so and you do that 10 times or some shit, you make a lot of money, like a lot of money. Because I used 0.1 lots 10, and you can enter only 2 lots in this it's very fast, so it doesn't allow you to enter. Right there I wanted to take something off right there so that I can feel profitable, and because the price is taken too high, I can just get out the market without getting something out of the table, right? So I had to get that out, so just in case the market reverses, I'll have something. Okay, so that's that. And now the market was starting to go down, and I know that we're going for sell side, and I was happy. You see the consolidation that is on the left side of the chart, right? I was expecting the market to just go through that. I didn't expect the market to react to that auto block on the left side before the judas swing that I was talking about before, right? So for the time I'm using it to see these candlesticks when they're closing, when they're opening, and all that stuff. In every 5 minutes there's a new candle being formed in the 5-minute time frame. Every minute there's a new candle being formed in the 1-minute time frame. I learned that by watching the markets. I didn't learn it on a YouTube channel, right? So that's that. Yeah, you have to excuse my network. Sometimes it just stops working. I don't know what's up. The network I'm using is very slow. So right there I was watching that volume imbalance. Price was supposed to support those 2 volume imbalances. It isn't supposed to go higher than that, and the candlestick, if it closes inside the volume imbalance, that's great. If you are watching me and you've watched ICT taking executions, you do you feel something like, do you hear something that ICT used to say? I mean, yeah, he's my mentor, so everything I have learned, I learned from him, and that's that. So as you can see, the candlestick closed under the volume imbalance and took out the previous candles low, so we are safe, and the market starts moving downwards, and we're in profits, and the account is almost double. We're at 6k. Imagine if this was a, if you had the balls to do this, like you had the balls like a man. If you had the balls to do this, I have the logic, right? I can explain what's going on right here. So that's that. And I took out also all my trades right there for today. In and out, and make your money and go out and eat that money. Don't stay in the market too long. Just leave maybe one running trade and go away. Ana fefra. Suza beitaten. Ana fefra. Abeitaten. Mosale berries. Runku koko ngonu uhlala wandawo mina uhlehamba. Suza beitaten. Ah, shit.